Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to Friday's Relaxed Call. Hopefully, you guys come in today feeling pretty good. If you've been watching the show, you've probably been, pretty well positioned for what did take place yesterday. We've been talking about this upper range for the past, 2 weeks, trying to draw charts every day, trying to dissect what's been going on. Is it faulty? Will we resolve to the downside? What type of clues are we looking at? And basically yesterday, finally, with the formula for the bears to actually be able to press through support, you had a clean gap and go to the downside. A move that I think a lot of people on the virtual trading floor was well aware that could take place and positioned for, whether it is with short spiders, spider puts, long gold, whatever it was, less positions on than we've had for a while. If you watch a VTF, you would see that Mark typically has multiple positions long on. I sometimes in portfolio approach have between 4 to 9 or 7 to 15 based on where we were, and we pretty much went out net short. So with that said, you could ride trends, then look at the action, make adjustments, and be prepared. And from an intermediate time frame, that's what took place. Now, a lot of people out there are starting to ask many questions. Is this the start of a 1987 style correction? Is this 2007? Is Europe's rebound out of recession, is it really real? Did Japan bottom? You know what, these are all question marks that no one truly knows the answers to. What we do know is what we see. And what you have to know is what time frame you trade. And if you are a macro investor, okay, and you've been putting money in every month for the last 10, 20, 30 years in an S&P fund, and that's what you do on a macro basis on a different time frame, you know what, if you stayed the course through 2007, through 1987, it didn't really matter. Because if something happens extreme, I'm sure in a certain amount of time, you'll probably be in good shape just like the past. If you're an intermediate trader like us, or you're trading for a monthly P&L, you damn well have to pay attention because you need to have a strategy, you need to be disciplined, you need to have tactics in order to make money and not get caught with your pants, you know what. So if you look at the chart here of the spiders or the SPX, you will see here is the trend that started in November. Here's a trend that got tested right here in June, okay, and here's where it continues. Now, May 22nd, that was the outside day. That was our last pretty much salute or invitation that we could be headed for some type of correction. This was that ascending channel then, and remember we measured it along the way. Remember when you had this type of wedge formation, broke to the downside, hit the 50-day, bounced up, had that little breakout failure, broke the 50-day, and that was 6%. So here we are now. Let's take a close look at that upper range that started to develop into a pretty, short-term head and shoulders top, which we've been also, showing you the potential of with the left shoulder, the head, the right shoulder, and the support neckline, which we gapped below and sliced it pretty quickly. I think some guys on the site weren't even prepared, and they started, doing what, getting prepared, pre-market yesterday, which also gave you some time. But anyway, with that said, this is the high. This is 1709. I would say 1682. Okay, that would be, in my opinion, okay, the neckline. So just say, give or take, cocktail napkin style, 30 handles below, 1680 gives you what? About 1650. Okay, 1650, what's this level here? This is 1647. So this is about 1650. So what that gives you is your first move, okay? And here is your 50-day. If you're trading today, we're flattish. Here is yesterday's pivot, which is 1658. Let's see what happens today. Maybe we're flattish. We break below yesterday's pivot, get to the 50-day, and then maybe regroup. We've seen that type of trade before. That actually happened right here. I don't know if that's going to happen, but here was your move lower. Remember, it broke below the pivot. If you had to be really quick to make money short, the better trade there for the day was when you had that red dog reversal bounce, okay, at here. Who knows what happens? All you know is this is your pivot. Here's the 50-day. Let's see what type of action we get today. Okay, another level to look at in the coming future, I would say, is around here. Okay, this is 1620. This would be a retest of this, break, the downtrend break to the upside. So anyway, with that said, we're pretty oversold. I wouldn't say drastically oversold. With that said, you have to pick and choose what you want to do. Some people were looking, if you come back to me, looking for some longs yesterday just in case we bounced. So for me, you can see on the VTF, I went back with Apple, on the close yesterday, thinking that it kind of held in there pretty well. Nice spirited move from earnings. Here's, the buy above the 200-day. Now it looks like it's flagging again, so it seems like there's some commitment up here. If it wants to stay in this flag type range, I would say, you could stay long on an active basis versus yesterday's low of, I don't think it was really 489. I think it was 494. And then if it goes sideways, maybe they pin it at 500 for options today, and it starts getting above 502 to 504, you could then get some continuation to what's been a really nice trade. So all in all, this has been something to gravitate towards. On the close also, Facebook seems like it's trying to hold some type of support. I know Sperling, a lot of the guys have been trying to place themselves in. This was green yesterday in a sea of red, so I chose that as one of my longs just to have some long exposure. We'll see it could bounce back. Right now, it's up a little bit pre-market. You now have a new point of reference here on Facebook. Home builders had a pretty potent bounce yesterday, okay? Some played it intraday, some got on late. All in all, it held the 200-day. It didn't break through, closed pretty strong. I guess, you can maybe take that out of the way now, and if you want to make this a bigger chart, let's move it over. You'll see that this range, which gave us some clues also to be somewhat cautionary because it never made a new high with the market, could continue this way. Okay, and then here is your new floor, okay, coming across. So with that said, perhaps, if we do bounce, you see something like this, but all in all, it showed a little leadership yesterday for the first time in a while. If you look at TBT guys who have been playing this thesis, higher rates, I've talked many times about a potential 3-handle in the 10-year, and last time being on CNBC Asia last week. Here you go as far as when it crossed 70. Remember that technical, buy area that we spoke about, and then, here you are, new highs. All in all, we've talked just about a thesis of higher rates for 2013, even going into 2014. So with that said, if you come back to me, you will know that the way to trade that or the strategy to use is potentially putting the TBTs in the drawer and shorting TLTs. And hopefully you've done that throughout the course of the year, either as a trader, you're trading it, or if you're someone that holds things, this has been something that we've been talking pretty positively about from that stance. As far as some of the banks, they're still struggling to hold on here. A few days back I tried to be long, I got stopped out, wound up breaking its floor. It's already on the 50-day. I don't think you need to be in any rush here yet until we see some kind of reversal pattern. I guess if the market was, to continue to trade down, there is a chance that you see 1950 in the XLF if this continues. What we do know now is yesterday's low is right here, so use that as a point of reference, 1999. Yesterday, we were focusing on Tesla for various reasons. One, because it was at the 21-day, right? We're not trying to be geniuses here. We're just showing you that, since 2 quarters ago earnings, it's been riding the 21-day. Here it hit it, bounced quickly. This broke below it, something that could have been different. Then the next day you had your red dog reversal, potent day, sideways continuation. So after earnings with the article and the downgrade, down 20 points or so, it made sense yesterday to be down with the market to look for some type of reversal, and some got just tactical cash flow as it went positive first early in the day, showing relative strength. And some probably held on to it. I think Sperling has it on his virtual trade floor. I guess the next little obstacle for this would be to get and stay above 144. But I think this is going to need time, just like a lot of things in the market. As far as we've spoken about the weakness in Amazon, Amazon really should never have broken this 300 or 295 area if you were looking for just relative strength. Now it's trying to see if it could hold this prior breakout of 285. So something to watch, maybe trade Amazon against this, which is 285.15. But ultimately, it's been pretty weak. So if you didn't get caught in this, maybe there's an opportunity here. But I'd be careful. It looks, it's like it's still heavy. Google also, we talked about this breakout failure 906. Then it came down to this trend line, broke trend line. Don't think anyone's really fighting in here, that's good. It's now below all the moving averages, so I don't see any blaring reasons why to buy it yet. Maybe it could be tactical, but ultimately, there's no, look at this 847. That's your next, decent sized support. And then a spot that we've been trying to navigate and ride has been the metals. You know, it's been, the metals were in a downtrend from the majority of this year. This is when it broke your intermediate trend line. This was your macro trend line. Then we talked about the blood in the street lows right here on this red dog reversal. Since then, you know, quick move, higher low, went to resistance, woke up on this day, okay, consolidated and broke out again yesterday. A lot of technicians out there on the macro basis are very happy that it broke back above this 130. I am still long some. It was yesterday was a little bit choppy with it, but I guess if it stays above this 130-ish, I'm going to stay with it also. And then perhaps you get a move back to, this 142 area, which would be something to do if the market continues to correct. Silver, we talked about being a buyer or a better buy between 17.75 and 18, but besides then selling, and look how that's been proven. Okay, it is a little extended, so a little tough, but ultimately, at some point that this trade and trend continues, you could see a move to retest this gap, which is north of 23. So with that said, it's Friday. Hopefully, I think a lot of people enjoyed earnings season. Yeah, we had a lot of good action, a lot of good gaps, and some continuation to the upside, some not. This move in this upper range, you could have kind of seen it. We posted a link on our blog showing the different charts that we talked about in real time that were posted with my language there. Some things better than others, but painting the picture of what could be taking place as it put together to get yourself situated. So if you do approach the market actively or on an intermediate level, you weren't caught being excess long, and hopefully maybe you made some money to the short side, and now, or you just have risk off where you could test levels, embrace volatility, because during corrections, it's a very exciting time, because what unfolds is the relative strength shows its face, the stocks that act the best stand out, and those typically are the ones to go to or become the next go-to list for the next time the market firms up. So summertime, have some fun. Hopefully it's a beautiful weekend. Scott Redler, T3 Live, the morning call. I'll see you Monday morning.